Everybody's asking the same question right now. Has the housing market finally cooled off, or are we just in the eye of the storm? I've dug through the most recent data, including some breaking reports from the National Association of REALTORs for the national market, the Sevier County market, and our local market here in Knoxville, and we're gonna break it down for you in plain English. Let's start with the big picture. Nationally, the market is not crashing, but it's definitely not 2021 anymore. In October, existing home sales ran about 4.1 million annual pace, which is up from earlier this year, but still well below the 5+ million pace that we were used to before COVID. So at the same time, the national median home prices sit just over $415,000. That's up about 2% from a year ago. So prices are still high, but price growth has cooled way down. Inventory has improved. We're up to roughly 4.5 months of supply nationally. That's more homes than last year, but still shy of a true buyer's market, especially here in East Tennessee, which we'll get into. More listings are sitting longer, there are more price reductions, and the average home is selling for just under list price instead of way above. So prices are still high, like we mentioned, but growth has definitely cooled down. On the financing side, the 30-year mortgage rates have drifted back into the low 6s, after being much higher. That's helped bring a few more buyers off the sidelines, but affordability is still the #1 issue. So most of the serious research right now is saying the same thing. It's no 2008 style crash, but very modest price movement. So some markets are slightly up, some markets are slightly down, and a market that feels a little bit stuck because so many owners are locked into their 2 or 3% mortgages. Try not to be jealous of that. Now, let's zoom in to East Tennessee. What's happening here in our market, because it's a little bit different. According to the 2025 State of Housing Report for our region, the Knoxville Metro has moved from crisis mode to something that's a little bit closer to normalization. What does that mean? Well, inventory has finally climbed back to about the 2019 level after being insanely low a couple of years ago. The median sold price in the region is now around $375,000, and the typical list price is closer to $430,000. That's roughly 72% higher than in 2020. Let that sink in. So a lot of the appreciation happened during the COVID era. Looking ahead, local economists are forecasting about 2.9% price growth and around 6% growth in sales for 2025. In the city of Knoxville, the median sale price right now is roughly $317,000. That's up a couple of percent from last year. Knox County as a whole, you're seeing median prices in around the high 300s, basically flat to slightly down versus a year ago, depending on the source you look at. Now, the bigger change is pace and negotiation. Days on market have stretched out into that 50 to 60 day range on average, instead of everything just disappearing over the weekend. Only about 1 in 5 closings are happening over list price right now, with well over half are actually selling under list price. In other words, we're moving back toward a balanced market where pricing, presentation, and strategy actually matter again. Thank the Lord. The part that still feels like a crisis is affordability. The same State of Housing report shows Knoxville's affordability index is at its worst level since the mid-1980s. Rents are up by about 60% since 2020, while wages are only up by 15%. More than half of renters are considered cost-burdened, and about a quarter are spending over 50% of their income on housing alone. A typical family would need something like $130,000 in household income just to afford even half of the listings that are for sale right now, while the actual median income here is closer to $70,000. At the same time, we're still underbuilt by an estimated 10,000 plus for sale homes here in East Tennessee. That structural shortage is a big reason why, even as the market cools, you're not seeing widespread price collapses. All right, let's talk about Sevier County, Sevierville, Gatlinburg, Pigeon Forge, because that is its own animal with all the STRs and secondary homes. As of October, the median sales price in Sevier County is about $550,000, up roughly 16% year over year. The number of homes sold is up by about a third compared to last year. But the median days on market has climbed up to the 90+ day range, and only a single-digit percentage of homes are closing above list price. On top of that, almost 30% of listings have a price drop before they sell. So the Smokies are still desirable and expensive, especially for well-located STR-ready properties, but buyers have a lot more leverage, and sellers can't just pick a number and expect multiple offers on day one. It's just not going to happen anymore. You need a realistic pricing strategy and a clear story for the property. So practically, what do you do with all this? If you're a seller in Knoxville or one of the surrounding counties, this is no longer a throw it on the MLS and see what happens, see how many offers we get on day one situation. Watch it fly off the market environment. That's out the window. You're competing with more inventory, more price-sensitive buyers, and longer days on market. So pricing strategy, presentation, and strong marketing are all critical. If you want to hit top numbers, you've got to consider all of these. And for the first-time buyer or the move-up segment, the good news is you have more homes to choose from. You're less likely to be in a 10-offer bidding war. And of course, sellers are more open to concessions and negotiation. So the challenge here still is affordability, because it's so important. It's more important than ever before to run the numbers, to get creative on financing, and to shop strategically. So for investors, particularly in Sevier County and the Smokies, underwriting matters again. You need to assume longer hold times on the market. You need to assume more realistic cap rates and also less automatic appreciation than what we saw in 2021 and 2022. It's just the facts. Bottom line, East Tennessee fundamentally is still a strong market. We're growing, we're underbuilt, and a long-term demand is still here. But we've shifted from an emotional, FOMO-driven market to a more data-driven, strategy-driven market. If you want to talk through what this means for your specific property, whether it's a home in Knoxville or a cabin in Sevierville, reach out and we'll talk through the numbers together.